Oil finally cooled off a bit today after rocketing higher last week in the wake of OPEC's shocking production cut agreement. And the dip in crude is giving you some pullbacks on the high-quality independent oils. Companies like Pioneer Natural Resources, PXD, which pulled back $2 today, even as the stock is up nearly 50% year-to-date. With crude back above 50, this is the kind of stock you want to watch into any weakness because the company can make a killing at these levels. Remember, Pioneer owns vast amounts of acreage in the Permian Basin, the low-cost region in Texas where drilling is very profitable with oil above $50, particularly in their place. They also have attractive holdings in the Eagle Ford Shale and the Rockies. Plus, Pioneer is one of the first oil companies to roll out a strategy that I adore. They sold a bunch of their own stock earlier this year in order to buy Devon Energy's Permian acreage for just $435 million in a deal that looks smarter and smarter by the day. And I think the stock could have a lot more room to run because Pioneer is genuine production growth, and we're about to get a new president who's much more pro-fossil fuels. But don't take it from me. Let's check in with Scott Sheffield, Chairman and CEO of Pioneer Natural Resources, who's retiring at the end of the year. And I think he's a shoo-in to get into the Investing Hall of Fame for Mad Money, given the fact he has a nearly 400% gain in the stock since he took the helm, particularly considering the adversity the whole industry has faced in recent years. Mr. Sheffield, welcome back to Mad Money. Good to see you, sir.
It's always great to be back.
Oh, thank you. Ever since I met you, I got to tell you, you've been a great educator to me about what's going on. And I need you to educate to me right now about how great the Permian is, how much oil there is, and what the OPEC agreement means for there and you.
Jim, I've been saying since 2013, believe it or not, nobody believed me then.
No, we did, remember?
You did.
Okay.
But the Spraberry Wolfcamp field in the Midland Basin is a 75 billion barrel field recoverable. The Delaware is probably 40. And so the Spraberry Wolfcamp is the second largest oil field in the world.
In the world.
Nobody believed me back 3 years ago. And now we have over half the U.S. rigs in the Permian Basin. Most of the rigs that are drilling in the world today are in the Permian Basin. And so it's ready to take off, especially with this recent OPEC agreement.
Now, one of the things that you did was that you point blank said, look, we're going to do some equity offerings, and we're going to buy choice areas, and we're not going to stretch our balance sheet. Every one of those equity offerings, people made a killing on, didn't they?
Yes, they did. And I think it's always important for investors to make money. Our timing was because I've learned my lesson with 5 downturns. You got to have a great balance sheet. So this is the first downturn that we've had a great balance sheet. In fact, the best in the business. We essentially have zero debt today. And so it's going to allow us to grow to how many companies do you know can grow up to 1 million barrels a day in one field without any more equity offerings, without any more selling of assets over the next 10 years?
No, you are a growth company, just like all the other growth companies that we talk about, of which there aren't that many. Permian Basin horizontal economics among the best in the world?
Yes, exactly. 50 to 65% type returns based on current strip price right now. Exactly.
And you have done something that you're not getting enough credit about, and American engineering's not getting credit enough. How much does it cost you these days versus, say, 3 years ago to get something out of the ground?
This costs us now about $8 to $10 finding cost, our operating cost.
And how high was it?
It's probably up in the $15 to $18 range.
So you've managed to cut the price of getting stuff out, through American technology, through pitting each other. How did you do this?
More efficiency than the service companies. The service companies are giving us 35% back, but it's the efficiency gains, improving the size of the frac jobs. We're doubling the size of the frac job, using twice as much water, twice as much sand. We can drill the wells in half the amount of time, in 20 to 25 days versus 40 days. And that's why you're seeing the Permian continue to grow through this downturn.
Now, you're also not a risk taker. I mean, you're not betting on oil going through the roof, right? You've got a hedging strategy that's the best in the industry that I've seen.
Yes, the last 5 years, we picked up $2.5 billion worth of value. It's all three-way hedging. $2.5 billion in value.
Hedging.
In hedging, yes, the last 5 years.
So you're not making a bet that oil's going back to 100?
No, but we want upside. So they're all three ways. So between 40 and 50, we get 50. Between 50 and 60, we get that price. We give away the upside above $60 for just 2017. We have decided not to hedge for 18 because I think we'll start seeing supply-demand start drawing in 18.
Right.
I hope it happens in 17 with this OPEC agreement, but it'll definitely happen in 18.
Well, I think that was important because you have a chart that says Permian Basin is the only growing oil shale play in this country since 2015. They're all going down.
Exactly.
Now, will you open up Eagle Ford if it does go up there? Because I know that you've got other areas you can drill it.
If oil prices stay in that mid-50 range, we'll probably drill 10 to 12 wells next year.
Okay.
In
Now,
Eagle Ford.
what does President Trump mean for you?
We had 2 Christmas presents, the way I look, for November. We had Trump come into office, and secondly, we had a successful OPEC meeting. So with Trump coming in the office, What they're talking about is expensing all expenditures. So if we can expense all expenditures.
Is that behind the scenes what they're talking about?
That's what they're talking about going into 17, 18, 19. But it's not just our industry, it's all industries.
Right.
He wants to get all industries, get a head jump, create new jobs, create new stability in this country. And I'm excited about what's happening.
Do you, one of the Christmas presents might be returned to OPEC, or do you think they mean it this time?
No, I think OPEC, if you read Ali Naimi's speeches as he's traveling around the country, Russia said they're going to cut 300,000 barrels a day in 2008, 2009. Did they do it? No. I'll be surprised if Russia cuts. Saudi will cut. But Saudi had to do something. Their budgets, their shortfall, they lost $200 billion of foreign reserves, 750 down to 550. So they had to do something. And so they're trying to reduce the inventory down to get crude back in the 50s. Hopefully we'll have a draw second half of 17.
Do you have enough pipeline to get your oil and your natural gas out of the ground and get to its markets?
Yes, we do. Permian will start growing about, I think U.S. production, it's bottomed out about 8.6 million barrels a day. It'll be up to about 9.1 probably by the end of 17. It'll be up to about 9.5, 9.6 Permian. I mean, U.S. production.
Right.
Most of it will be Permian growth.
Well, but if that's the case, then our oil's going to go back to 45, isn't it?
The big unknown is that most projects around the world stop coming on by the end of 17. All these investments that were made in 2008 to 2014, the last ones are coming on by the end of 17. And so I expect something to happen between 18 and 2021. There's only 4 places can supply the world's demand: Permian, Saudi Arabia, Iraq, and Iran. 4 countries will supply the world's growth during that 4 to 5 year time frame.
That's incredible. Okay, so this is it for you. What are you going to do? I know you're going to stay on executive chairman for a little bit.
Yeah.
But damn, come on, you're
executive
not
chairman.
done, are you?
Well, you know I'm on Williams' board, so Williams has.
I know that was, I said by Williams when you got on the board because I knew they were finally serious.
I know you're good friends of Keith, so hopefully Keith is excited about the board changes. We got a couple more great board members we're interviewing now. So Williams. I joined recently John Brown as executive chairman of Letter One.
Oh, okay.
And so I've joined that board. It's a group based in London. So and then stay involved in Pioneer. So very, very excited about it.
Well, congratulations on everything you've done for shareholders. When you did that deal at 170, we said, gotta get in, gotta get in. And the next one we said, gotta get in, because we know that your money good. Thank you so much. That is Scott Sheffield, the chairman and CEO of Pioneer Natural Resources, up 400%. What's not to like? Mad Money's back after the break. Thank you. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.